So good afternoon, everybody. Welcome to our webinar, Understanding International Trade Documentation and Post-EU Transition. My name is Russell Wood, and I'm one of the EU business advisors for Buckinghamshire Business First, which is the growth hub for Buckinghamshire. This is the fifth in the series of 11 EU exit webinars in partnership with SEMLEP Growth Hub, OXLEP, BBF, and New Anglia Growth Hub. It's aimed at helping businesses for international trading post the EU transition period. We've got about 30 or so attendees at the moment for today's session. But now I would like to welcome Andrea Collins, who's from the Export Department, who will be presenting the webinar. Andrea is an international trade specialist with 24 plus years in the industry. She's a linguist fluent in French and Spanish, and Andrea specialises in importing, exporting, Brexit awareness, business resilience and business growth. She's a business development specialist, having worked in the chemicals, IT and professional services sectors, holding senior roles within the FTSE, NASDAQ and Euronext companies, including ICI and Right Now. A passionate ambassador of UK microbusinesses and SMEs, she launched the Export Department to assist these companies expand their horizons internationally and raise the profile of UK goods and services abroad. As well as supporting private clients with their international trade endeavours, Andrea delivers one-to-one support and one-to-many support for a number of growth hubs nationwide, and is responsible for the design and delivery of a range of EU exit, international expansion and business resilience support programmes, which are operational across Lincolnshire, Leicestershire, Derbyshire, Nottinghamshire and Oxfordshire. An MBA graduate, Andrea is also a trainer for the Institute of Export and International Trade. In the webinar today, Andrea is going to look at future changes in import and export documentation so that you can take steps to prepare and hopefully avoid costly mistakes and delays post the EU transition. If you have any questions, please can I ask you to put them into the chat during the webinar, and Andrea will look to answer these at the end of the session. Unfortunately, Andrea has issues with internet today, so she has switched off her video, so you won't see her at her desk, but you will hear her speaking. So I'll now hand over to Andrea.
Wonderful, thank you, Russell. Yes, that's maybe not such a disadvantage, not seeing me at my desk. I'm working a number of long days at the minute, so I'm not looking my best. Yeah, so thank you, Russell. As Russell introduced, we're going to be looking at international trade documentation today. So as Russell said, this is I think the fifth in a series. So some of the stuff you'll be becoming familiar with when we talk about some of the systems that you consult for getting the right information. But we're going to look at documentation that typically is going to have to accompany your goods, whether that be on your imports or your exports, and then I'm going to discuss the systems and the various tools and databases where you can find out what documentation you need. Okay, so in terms of the agenda, we're going to do a quick recap for anybody that hasn't been on the previous ones, and this is really looking at the changes from the 1st of January from both an exporter's perspective and an importer's perspective, and kind of highlighting the core areas that you should be looking at if you're not looking at them already. Then we'll take a look, just a very quick glance at the various different systems that you can access for clarification. But we're not going to go into too much detail because next week we're going to get a little bit more practical. So we're going to start diving into some of these databases because I'm talking to you about them, but I've not actually shown you how to navigate them and the kind of data that they can display. So next week's is a little bit more practical. I think it's next week's. And then we'll go through the documentation, the types, the source and their purpose. So, you know, why are they actually needed to accompany the goods, and why might they be needed in advance of the goods being shipped and so on. And then, as usual, with all of our presentations, there's the sources of information at the back. So a whole host of hyperlinks directing you to additional information and additional sources of support. Okay, so just a quick recap. So looking through the lens of the importer, so you're importing your goods. You might be fortunate in so much as you've been importing from around the world up to now, so you'll have a certain understanding of the requirements. But just say you've exclusively traded within the EU, so some of these things are going to be hitting you cold. So we've got the new border operating model, which we've touched on exclusively in one of our webinars. So that is the UK government laying out its border controls, if you like, its rules and regulations around goods coming into the UK. And similarly, there's a smaller section in there about goods that have to clear UK customs and what they need to do to clear EU customs going the other way. We've got the Northern Ireland Protocol, which does add a layer of complexity for us businesses based in GB if we're moving goods to Northern Ireland. Anybody that's impacted in this way, then I would highly recommend you sign up to the Trader Support Service if you haven't already. That is a dedicated service for Northern Ireland and Great Britain businesses that are impacted by the Northern Ireland Protocol, which for some of you don't know is kind of that agreement as part of the withdrawal agreement that effectively sets a hard border down the Irish Sea. So there are implications for goods being placed on the market in GB, in Ireland, or in the EU, sorry, and in Northern Ireland. But the Trader Support Service is a really good place to start for that support. Then we've got the new UK global tariff. So this is the tariff that will, the duties that will apply to all goods coming into the UK, whether they're from the EU or whether they're from the rest of the world. Then we know that there's complexity around EORI numbers. We all have UK EORI numbers, or we should have already. But as an importer, is there potentially a requirement for you to have an EU EORI number? And the situation that would arise whereby you needed an EU EORI number as an importer might be if your supplier delivers to you ex works, which means that it's incumbent on you to make the export declaration in the country of origin, if you like, or the country where the goods have been shipped from. So in that case, you'd need an EU EORI number. Try and avoid ex works at all costs if you can. It has huge vulnerabilities from an Incoterms perspective anyway. Commodity codes and clarification around those is obviously crucial as we approach the end of the year, because our goods are going to be subject to that level of scrutiny that's only been reserved for third country goods up until now. So it's essential that we have our commodity codes right. As importers, it dictates the amount of duty and import VAT that we pay to HMRC, but in addition to that, it ensures that we have the right documentation to clear the goods. And as an importer, it's your legal responsibility to make sure you have that documentation in place. Import preference, obviously, as we discussed on previous webinars, our preferential trade landscape pretty much disappears with Brexit. We've got those continuity agreements in place for some 22 countries. We've got the UK, Japan free trade agreement signed, and we've got an agreement in principle for Canada. But in terms of our preferential trade, it's going to be limited early on while the UK government catches up, trying to replicate our trading landscape that we've got as part of the EU. But those GSP nations, those generalised system of preference nations, will still be able to import their goods on a preferential rate of duty, so there's some light at the end of the tunnel. We're going to touch today on the import declarations and the documentation that goes with those, because that's something that if you've only ever traded within the EU, you'll not be familiar with. We know that there are a number of custom special procedures that are available to help us speed up the flow of goods coming into the UK, but also suspend that import duty and import VAT in certain circumstances. So we need to get our heads around what they are and whether we're eligible and how they would benefit our business. We're going to talk today about valuation on import. I think we've touched on it previously, but it's basically a case of what appears on the commercial invoice from your supplier might not necessarily represent the dutiable value. So it might not be the value that HMRC calculate the duty and import VAT on. So I'll talk a little bit about that. You know that import duty and VAT is coming. You need to have a think about how you're going to account for that. Obviously, if by some miracle we got a UK and EU trade agreement signed by the end of this year, then potentially we'd see some, if not all, tariffs disappear, but we still have the notion of import VAT. We know the regulatory landscape is complex and it's not quite where it needs to be, so we need to be very much in touch with our federations and associations to make sure that we're aware of the latest landscape and how we can optimally prepare. We've touched on Intrastat before and how some of that will disappear for exporters, but it will still be a requirement for importers to file their Intrastat returns just throughout the whole of 2021. We'll talk about commercial contracts, about those terms that might refer to us as still being in the EU, but also in relation to transport and delivery of our goods, and whether we should really have those Incoterms in our commercial contracts and also on our commercial invoices. And AEO status, we'll talk about that. For some of perhaps the larger companies or the companies that import in higher volumes, then AEO might be something that you might want to look at for a whole raft of benefits. Exporters, again, we've got the new border operating model. The important thing to note as an exporter is, whilst the UK government has phased in the introduction of import declarations, unfortunately the EU isn't extending the same privileges. So as an exporter, we have to be ready to go on the 1st of January in terms of making those declarations and making sure all that documentation is correct for our goods. EORI numbers, there's the same potential requirement for an EU EORI number if you deliver door to door to your customers in the EU. So if you deliver under what would be classed as deliver duty paid, then and you can't change that term with your customer, then you're going to need to get an EU EORI number and very likely register for VAT in that destination country as well if you want to continue delivering with that duty paid. Commodity code, just as important. You don't want to be incorrectly classifying your goods and passing that problem further down the line. So in so much as when we import goods into the UK under an incorrect commodity code, we might be overpaying duty or we might be underpaying duty. We can easily pass that problem on to our customers if we don't classify our goods correctly on export. We know that it is going to be more challenging to deal with our companies and buy our goods. We know that because they potentially have additional duties and VAT applied to them in the EU, but also it becomes a little bit more problematic in terms of dealing with us as opposed to dealing with more local providers or other companies that have preferential trade agreements with the EU in the absence of the UK having one. So we have to kind of up our game. We've talked before about how origin becomes a little bit more complicated when that EU raw material and processing can't be counted in our accumulation. We know that we're going to need more export licenses than we have before, specifically about dual use goods that we've been able to ship to the EU without the requirement for a license up until now. We know there's regulatory compliance around, for example, placing goods on the EU market moving forward. That isn't as straightforward because in the UK we're working to a different regulatory regime and the EU obviously has its. Intellectual property, we know there's challenges around that. We're probably going to have to manage both UK registered designs and trademarks at the same time as managing our EU ones. And there's compliance around export. So because our goods are going to be going into the EU are going to be exports, we need to make sure that we comply with that proof of export so that we can demonstrate to HMRC that when the goods were zero rated for VAT, they physically left the UK. Otherwise, we as exporters become liable for that VAT to HMRC. So there's a whole load of things for both importers and exporters to consider, but hopefully on the documentation side of things, we'll cover some of that off today. So, understanding what documentation is required. Anybody that is importing or exporting at the minute will be very familiar with the UK trade tariff. It's where we classify our goods, it's where we determine what rates of duty are applied, it's where we determine what documentation is required. All the different considerations, conditions and legalities of trade are in there, from who, right the way down to sanctions and embargoes. Who can we ship to? Who can we receive goods from? The UK trade tariff currently is based obviously on the EU external tariff. So and technically we are still part of the EU customs union throughout the transition period. But as you know, the UK has also launched its own UK global tariff, which applies to all of those goods that are coming in from outside of the UK. There have been a number of simplifications. I think it might have been last week that I mentioned the government has slashed a number of tariffs, something like 5,000 tariffs. They've completely slashed. They've done away with tariffs that were maybe 1.5 or 2%. And they estimate that based on the new UK global tariff that some 60% of goods will come into the UK without attracting any duty. So it could be that if you're trading with the rest of the world, when you do a comparison between what you're paying under the current common external tariff, that you might have a simplification and you'll pay slightly less. Another good tool, although it's very much a work in progress, is the Trade with the UK tool. So in so much as the UK tariff talks about tariffs, the Trade with the UK tool will enable our suppliers, and indeed us, to be able to put in the country where the goods are coming from and the commodity code, and it will list documentation that's required to clear those goods at UK borders. Flipping it around the other way, I've been talking for weeks about the UK Market Access Database. That's actually been replaced, I think, at the end of this month with the Access2Markets Database, which is broadly the same, but actually better. So we can search, as I said before, as a third country, put in our commodity code, and we can determine what the rate of duty will be that's applied to our goods from the 1st of January when they go into the EU and there isn't a trade agreement signed. I love this tool. This is further advanced than the Trade with the UK tool. So this is going the other way. So it's still a gov.uk tool, but it talks about what documentation do we need to clear the goods in the EU. So you put in the country that you're exporting to, so say France, which obviously comes up as the EU as well, your commodity code, and it will come up with the standard documentation that you need to clear goods, but then it also comes up with commodity specific requirements around certification, licensing, manufacturer's declarations, a whole host of things that you just might not have thought about before. Okay, so let's move on to documentation. So I don't want to put anybody off by showing them this very complicated form, but this is your import and export declaration. This is the C88, or the Single Administrative Document, or we call it SAD document. But this is the document that's used across the EU to make import and export declarations. And obviously, as of the 1st of January, the EU becomes an export country to us, and we become an export country to them. So it is it's based on HMRC's underlying system, which we call Chief. Just to complicate matters, HMRC is in the process of rolling out a completely different system called CDS. But if you are making your own declarations, the chances are you're using either the National Export Declaration, the National Export Service for your export declarations, or you're using third-party software that interfaces with Chief for imports. Or some of you may be using a freight forwarder, but this is the kind of form that that their system will print out once they've done their declaration on your behalf. Okay, so we're just going to take a quick look at it, because what I want to get across is, and we're doing this with companies that we train, is that even if you outsource your declarations to a freight forwarder or an agent, unless they're working for you in a capacity whereby they share the liability if something goes wrong or if something's misdeclared, then you are solely responsible for the accuracy of a declaration. So it is crucial that you understand the information that you need to give to your freight forwarders, and that you you get this across to them in unambiguous terms, if you like. So just going to take a quick look. It's split into several sections, if you like. The first section is your header level data. So this applies to the entire declaration. And the things we're catching there is obviously the exporter details, the importer details, and if any agent is acting on your behalf. The type of export, the type of declaration, sorry, is it an export? Is it an import? Have the goods arrived? Haven't the goods arrived? We're capturing the number of items. So items are split by, it's not just the number of widgets or units that you've got. Items are classified as products that have the same commodity code would be one item, or products that have the same country of origin would be an item, or products that have the same customs procedure code would be an item. So it's not just the number. You can have 5,000 widgets, but if they've all got the same commodity code, you've just got one item. Total packages, so that would be the outer packages like the pallets and so on. But this is the kind of data that we're capturing in the header level. So we're capturing the country of origin, which is really important when we start talking about importing under preference. We can only gain preference on goods coming from a certain country. So it's the preference that follows the goods through the chain, if you like. Then we have a section that talks about the transport and delivery. So we're capturing the type of transport. Is it going by sea freight, air freight? And we're capturing the delivery terms and obviously the cost as well. So on a straightforward export, obviously that would be GBP. But on an import, it could be in a local currency, or it could have been converted to GBP. And I'll come back to that later on when we talk about valuation, because as I said, the amount that you pay your duty and VAT on an import isn't necessarily what appears on your supplier's commercial invoice. But this is kind of like the next section, if you like. And then we have the bit about the goods. So this is the opportunity to put the plain text description in here that describes the consignment. So, you know, how many boxes, whether they're marked in a certain way, and so on and so forth. We're capturing, really importantly, the commodity code, which I hope throughout the course of the last few sessions I've expressed on you the importance of getting that right. And the customs procedure code, we're telling, on an import, we're telling HMRC, but on an export, we're telling the local customs authority, what's the purpose of the movement of this goods? Is it a permanent import? So it's coming into the UK and you don't expect it to go back the other way, then that would have its own procedure code. If it was a permanent export to the EU, that would have its own procedure code. But when you get into customs special procedures, when you're moving goods into inward processing or perhaps into a bonded warehouse or customs warehouse, then that's where the customs procedure code has to be built up. So it tells the local customs authority where those goods are going. Are they being released into free circulation in the UK? Or is that duty and VAT being suspended because they're going into a special customs procedure? So that customs procedure code is really, really important. And then this lovely section is where we have our line items for duty. So from all of the information that's input into the C88 and the valuation build-up, which we'll talk about later on, HMRC systems are able to determine the amount of VAT and duty we pay. So that's stripped out by line items. There'll be a line item for import duty, a line item for import VAT, and then any additional duties like excise duties or anti-dumping duties that apply. Okay, and then we have, as I may have mentioned before, we've got several different ways of settling up with HMRC when it comes to import duty. We can settle up to clear the goods of customs, we can have a duty deferment account, we can have what's called a flexible accounting system, lots of different ways, but we need to, if we're when we're making the import declaration, remember duties and taxes is just about the import, then if there's duties and taxes to pay, we have to make it clear on here how we're actually going to pay. So that would be in the method of payment column there. If you were operating a duty deferment account, then the duty deferment account number would go in there. So the minute the goods go appear at the border, HMRC love duty deferment accounts because they clear so quickly. It's a case of just putting processing it with the deferment account number in and the goods clear and there isn't a backlog. So that's the C88. Hopefully it's not too scary. And like I said, if you're using a third-party software suite, if you are doing your own declarations, then it kind of guides you through. It looks a little bit ominous just seeing the paper copy. In reality, you won't be doing a paper copy unless all the lights have gone out and everything's gone wrong. You'd be using some form of third-party software. This is the valuation build-up sheet. So Chief, the underlying system, wants more information about the costs that go into your product. So they won't just charge you duty and VAT on the cost of goods from your supplier necessarily. They want to calculate in there the freight, the insurance, there might be other charges such as tooling charges. There might be a deduction as well in terms of things that I can't think of one at the moment, but Customs Notice 252 lists everything that can be incorporated into valuation build-up or deducted. I've actually put that Customs Notice there, but they calculate import duty and VAT on a lot more than just the cost of the goods themselves. So this is where you do that. Also, they deduct certain parts of the transport. So currently how it works in the EU is when the goods enter EU airspace, for example, the cost of transport from the EU border to the UK isn't counted in duty terms, but it is counted for VAT terms. It's all very complicated. but actually quite simple once you start, and quite logical to understand actually. But this is the form. If you were doing a manual calculation, this is the form. Alternatively, the system that you're using would guide you through this and make sure that you put all of that required information in there. Okay, we've talked a little bit about contracts in Incoterms in the past. How this fits in with documentation is we must have these Incoterms in our commercial contracts with our suppliers and customers moving forward. It's imperative. I've said before that we've done door-to-door trade with the EU. It's never been an issue. We deliver goods, we have goods collected from us. It becomes an entirely different ball game after Brexit. So it's imperative that we have that understanding with our suppliers and our customers as to where the goods will be delivered, who's arranging the transport, who's paying for the insurance, who handles those customs procedures, and who's liable for those duties and taxes. That's what Incoterms are about, and they must be in the commercial contract, and they must really be on the commercial invoice as well. They remove all of the ambiguity around those areas that I've talked about. There are a set of terms that are used globally, instantly recognizable. They remove any kind of language issues or interpretation issues, and that they're unambiguous. So they become really, really important. If you haven't started to have those dialogues with your customers and suppliers, please start having them now, because if you continue delivering as you are today without exploring what that means in light of customs formalities and duties and border controls, you might find that come the 1st of January, either you can't do what you want to do, which is in the case of if you're deliver duty paid into the EU and perhaps you haven't got a local VAT registration, then that's going to be a big headache for you. But similarly, there's going to be some of the Incoterms are just going to be just too burdensome for you to operate under. So a perfect example would be if you're delivering deliver duty paid, is there the opportunity that you can renegotiate with your customer and say, can we deliver at place, which means that you deliver the goods still, it can still be at their premises, but that they become responsible for the import declaration. So that's just an example, but we're going to cover off Incoterms in another session as well. So invoices. Invoices is kind of an umbrella term to encompass commercial invoices, pro forma invoices, and freight invoices. So obviously your freight invoice is the bill from your carrier telling you how much you owe and for what. Your pro forma and your commercial invoices are then your invoices from your suppliers if you're importing the goods, or for your customers when you're exporting. So they indicate the buyer, the seller of goods, the description of the items, the value, and any proposed terms of sale. So Incoterms would be in there, like I say, on your commercial invoice. If you think about a pro forma invoice, it's like a quote in an invoice format, but it might well be required by your customers in advance of the shipment, because they might be looking to apply for an import license. They could be looking to arrange a pre-shipment inspection, or it could even be a requirement in a letter of credit scenario. So at the very least, and I think I won't go through the details because I'm pretty certain last week somebody asked about what should be on a commercial invoice, and I sent those details through to Sam, so you should all have them by now. But essentially, if you think about a pro forma invoice, it's more like a quote, but the commercial invoice is what's actually being shipped. Okay, so it's the actual quantity of each item of goods, and it can differ from the pro forma invoice. If you think you've given a quote to provide 1,000 widgets, but actually due to a manufacturing issue or an inventory issue, you can only actually ship 800, then therefore it's the commercial invoice that would reflect the actual amount shipped. So it's the actual quantity of the goods supplied, the actual weight and net weight of the items, and the actual value. And you have other things on there like the method of payment, and by that time you'd know the exact cost of transport and the route that was being used as well. It's important to mention that even free of charge goods will have a value for insurance purposes and customs purposes. So you wouldn't just be putting 0, if you like, on a commercial invoice. All right. Packing lists. So these are obviously mandatory for shipping goods into the EU. a packing list is such a detailed document, so it states all of the product and packaging details that are in each shipment. As an exporter, you have to create a compliant packing list document that can be used by all parties along the supply chain. So anyone moving or handling or receiving your goods, they have to be able to interpret the packing list accurately. So what would you put on there? Obviously, you'd have the importer, the exporter, all of their details. Don't forget those all important EORI numbers go on there, as well as on the commercial invoice. You'd put things like the measurement and the weights of the goods. You'd have details around the vessel and the voyage details, port of loading, port of discharge. But importantly, you have details on there around how the goods are packaged and how they need to be treated, if you like. So any special instructions that denote how those goods are handled is important that goes on the packing list. You might be asked to issue a packing list in advance to the customer. They might want an electronic copy. So that might be it, but it typically accompanies the goods. When we're talking to customers about what goes on a packing list, for me, to keep things really simple and tight, a packing list is almost like the commercial invoice, but without the commercial data. So you could almost use the commercial invoice without the commercial data as your packing list, because then the two tally up absolutely perfect. The other thing I stress to clients as well is if you're sending more than one parcel, please number the parcels. So, if you're sending 10 parcels, number them 1 of 10, 2 of 10, 3 of 10, and so on. And because if one of those parcels goes missing, you know which one to replace. Okay. Certificate of inspection. So anyone not familiar with pre-shipment inspections, they are physical inspections of the goods that are carried out in the country of export. So it might be a requirement of your customer that you're exporting to that there's a pre-shipment inspection. And essentially that inspection determines the nature of the goods, whether they match the invoice and any of the documentation, and it helps the importer to calculate the correct rate of duty that's payable in the local market once they receive the goods. Okay, so quite often they can be stipulated in a letter of credit or any other kind of documentary evidence. They can be a requirement, and we would certainly expect they're typically for rest of the world shipments, but we would expect that perhaps moving forward they might be required for some of our shipments to the EU as well. But some countries where they've previously required a pre-shipment inspection, they've actually replaced that now with a certificate of inspection, or sorry, not a certificate of inspection, a conformity certificate, if you like. So Saudi Arabia is a perfect example of that. They've introduced a kind of conformity assessment program, and that replaces the requirement for the pre-shipment inspection, and that covers all goods that go into Saudi. So a certificate of inspection may be required there, given out there are a number of big players in this market. Bureau Veritas is one of them, but there's another 2 or 3 that operate and do these pre-shipment inspections. Rules of origin we've talked about. So I've mentioned this database before because it holds all of the origin protocols for trade agreements that have been negotiated across the globe. As we've mentioned before, the government has some 22 rollover deals or continuity agreements, but this particular database is kind of kept up to date and so on. As I mentioned earlier, as all the GSP nations, so there's GSP, GSP Plus, and EBA, everything but arms nations that we import from, will continue to import under preference from them. But I really like this database. As I say, it's developed by the WCO and the ITC. It's a great source of everything origin, and it's really quite user-friendly. Trust me, when you're having to, as I have for years, trail through the origin protocols in each individual EU trade agreement, this was an absolute godsend when this came around. How this links into preference. So obviously, Preferential documents are the ones that certify that the goods are able to get that reduced tariff or exemptions when they're exported to countries that have those privileges, so have those preferential trade agreements in place. So where a deal's in place and the products meet that criteria, so they've either been wholly obtained in that country or sufficiently transformed in that country, then the importer of those goods is able to get that preferential rate of duty. So the certificates that are in operation to demonstrate that origin, you've got the EUR1 form, which we're all familiar with. So that's all goods that originate from an EU member state. We've got the ATR movement certificate. So that's when that's needed for goods going into Turkey. And then you get the EUR Med, which is linked to the Euromed agreement. So those countries like Algeria, Israel, Morocco, I think are in that trading bloc. And then you've got there used to be what's called the GSP Form A. However, that is being replaced, pretty much it is replaced now by what we call the REX system. So those countries, those GSP countries, are actually able to self-certify the origin of their goods when they're coming from those countries. So there's no longer the requirement for the GSP Form A. But these documents are really important, and your consignment won't be able to attract that reduced rate of duty without having that proof of origin. I think I've mentioned on a call before that the EUR1 and the ATR forms aren't going to be valid for UK origin exports from the 1st of January. So the local chambers are creating their own UK version of those, but they'll only be issued when there's a preferential trade agreement in place. So we're not going to see a huge number of these being generated initially next year. I can't recall whether I've mentioned it before, but in addition to having a certificate of origin, there are occasions where you can self-certify the origin of your goods. So certainly with goods of consignment of less than €6,000, you can make your own declaration, your own origin declaration on the commercial invoice. So that negates the requirement to get a preferential document. Regular exporters can obtain, it's kind of like a simplified procedure that allows them to become approved as approved exporters. So they get the authorization to act as an approved exporter, and that allows them to make that declaration on the invoice, but it doesn't limit the value of the consignment, which is obviously quite important. Also, you can have a binding origin information, which we've talked about binding tariff information, but the same applies to the binding origin information. That doesn't, however, negate the requirement for a preference certificate, unfortunately. It's just issued where the origin of the goods can be difficult to clarify. So you can go through the process of having an official decision on the origin of your goods, but it doesn't impact whether or not you need that preference certificate to accompany them. I'm just looking for time here. So in much the same way as we have certificates of origin for preferential trade, we also have them for non-preferential trade. And there may be situations where you have to have your goods accompanied with a certificate of origin, even when there's no preferential trade agreement in place. So this can be a requirement for political reasons. So the example I often use is if you're shipping goods to the US and the goods are actually originating in Iran or Cuba or China or something, that's potentially a political and trade conflict. So they might not want to be importing goods from those markets, even though they're coming from you, their origin is elsewhere. But there can be policy reasons as well. So, you know, a country might be trying to reduce imports of goods that they already manufacture. So they're kind of protecting their domestic market. And an example I often cite is a while back, China was importing silk into India and technically dumping cheap goods. So China applied anti-dumping duties, which inflated the cost of those Chinese goods in India. And So it kind of leveled the playing field for those domestic producers, if you like. So there might be policy reasons why you need a certificate of origin to accompany the goods. It can be a requirement of a letter of credit as well. So there could be a financial reason for it. And quite often it's perception. So we talk a lot about how overseas goods are perceived in certain countries. And the example I often use is for Russians, people from the Russian Fed, that the country of origin on their goods is almost more important than the brand, the actual brand as an indicator of quality. So goods that are produced in Malaysia or Hong Kong or Thailand are still suspect in Russia with regard to quality. So it just goes to show that even when there isn't a preferential agreement in place, you might still need a certificate of origin. And currently the ones that are issued are the EC certificate of origin and the Arab British certificate of origin. So the Arab League of Nations insist on knowing the origin of goods being imported. So 9 times out of 10, you will need an Arab British certificate of origin to ship goods into those nations. On occasion, you might get away with an EC certificate of origin as was, or maybe moving forward a UK certificate of origin, but you really need to check with your customer as to what's required to clear the goods. So yes, I think we have covered origin before. So we know that as manufacturers in the UK, we've got a bit of a challenge on our hands in terms of making sure that our goods are sufficiently transformed to demonstrate they're of UK origin. But I won't labour that point too much because I think we are covering it next week actually all around origin. But anyway, these are the documents for non-preferential origin. There are other certificates that might be required in international trade, and this is by no means an exhaustive list, but we are going to see with goods coming in from the EU and going into the EU, we're going to see a lot more export health certificates. So they're going to be required. Anybody who's taken a look at the border operating model, you can see how it's all laid out there. They're going to be required for live animals and animal products. So those kind of processed foodstuffs, poultry, meat, fish, and so on. The EU in particular demands that all imports of animals and animal products meet those acceptable health standards. So in much the same way as they demand that from the rest of the world countries, as of the 1st of January, all of our goods going into the EU are going to be required to have that export health certificate or that sanitary certificate. They're issued by vets, essentially. So there are a number of companies that can help with those certificates. One that springs to mind is AmiVet. They provide export health certificates for meat, dairy, food and animal products. So that's export health certificates. There's certificates of conformity. That will be an increasing requirement from the 1st of January. So some fruit and vegetables have to meet European standards, and in much the same way as EU goods have to meet UK standards. So anybody in that sector will be familiar with the PEACH system now, so that procedure for electronic application for certificates, PEACH system, and you have to register on there, and your goods will be accompanied by a certificate of conformity for those fruit and vegetable consignments. There's also what we call certificates of free sale. So when exporting to third countries, which obviously the EU will be to us from the 1st of January, we might be asked as part of that sale to produce a certificate of free sale. So you'll see it referred to as a CFS, and it's kind of like an attestation or confirmation that the goods that have been made meet certain standards, so they don't pose any risk to health when they're released into free circulation. They kind of comply with all of the relevant regulation. So DEFRA is the one that issues CFSs for goods that come into contact with animals, so any kind of vet medicines, for example. The Department of Health issues CFS for medicines. HSE issues them for biocides, and there's a whole ton. And as you start getting into, and I think a couple of weeks back when we looked at the border operating model, I showed you that graphic that I really like that just shows all the different government bodies that that come into these import and export declarations and how they interact in terms of pre-notifications, pre-authorizations and certification. Certificates of analysis, this is another one that you might be called to produce. So that's kind of confirming that your goods have undergone any specific testing and they've obtained certain results. So it'll be driven by the importer. It actually might be a requirement as part of a letter of credit, or it might be something that actually, when you look at the documentation needed to clear the goods, you might see that it's a requirement. Quite often, it's something that is required for a letter of credit, or it might be your customer or your importer that's demanding it. We see it a lot in food products, in wines and spirits, chemicals and pharmaceuticals, and the actual testing can be done at your premises as the exporter, or it can be done where the goods are being loaded for transport. But it just adds an additional cost, and certainly the wine community is up in arms about this at the moment, because the costs are quite significant should we have to provide these certificates of analysis continuously for goods going into the EU. Phytosanitary certificates, this is all to do with plants and plant products. So if you're exporting to the EU, you have to make sure that those products comply with the EU legislation on plant health. So that's where you need a phytosanitary certificate. And we're seeing that certainly some of the clients that we're supporting at the minute, there's a number of phytosanitary certificate requirements for those commodities. So that's something that you should be looking at. Catch certificates is another one that's coming up. So from the 1st of January, UK companies will have to obtain a validated catch certificate for the export of fish into the EU. You have to provide a separate certificate for each consignment, and you have to give that to the importer, to your customer, in advance of the shipment, so they can give it to their local customs authorities. And there's kind of set timeframes, which I can't recall exactly what they are, but depending on the mode of transport, those catch certificates have to be issued so far in advance of the goods arriving. I think something like 72 hours before landing if the goods are arriving by sea, and then shorter timeframes if it's by air or road. Oh, wow. Motoring through. Control goods, so we talked about this before. There's 3 types of control on goods. So there's outright bans, where we can't import or export those goods at all. There's quotas, which I think I've talked about before. So that kind of controls the volume of imported goods at a reduced rate of duty. And then there's surveillance. So that's when the import and export of goods is monitored with licenses. So we often think about that being exclusively linked to military goods or dual use goods. For example, those dual use goods are those ones that can be used for both military and civil purposes. But it can apply to other things. There are works of fine art and other things that require licenses to export and indeed to actually import into the UK. There is a change in terms of Brexit and the issue of dual use licenses. So in the past, we've been able to send goods of dual use into the EU without a license. Obviously, from the 1st of January, as those third country rules apply, we have to have our dual use licenses in order to ship goods into the EU. But I've provided all of the different links there for you should you be impacted, should your goods be controlled in that way and have a licensing requirement. Transport documents, I'm going to rush through quite quickly. The first one I really want to mention to you, because when you're using a freight forwarder, it's really important that you instruct them in a certain way. Because as I said, if they're working for you in a direct capacity, they're operating on your instruction, and they'll follow that instruction to the letter. And providing they've done that, if anything goes wrong, you're liable, really. So an export cargo shipping instruction is a really good mechanism to instruct them on everything that they need to know relating to the transport of your goods. How to handle them during collection, how they need to be delivered, how they need to be stored, all that kind of stuff, and any kind of special requirements or care needed. And it lays it out in unambiguous terms, if you like. So it's always really good practice. When I talk to clients about, well, how do you instruct your freight forward? Oh, we send them an email, but that email won't have any standard format to it. So it's always good practice to have an export cargo shipping instruction that you can clearly instruct the logistics provider on how to handle your goods while they're in transit from you to your customer. And I suppose from a liability standpoint, if the goods arrive damaged or they're lost in transport or lost in transit, and for dispute resolution purposes, if you've got that instruction providing that documentary evidence, then if those goods are damaged, then the shipper potentially is responsible for that. So it's good for covering yourself in that respect. Cargo manifests, these are legal requirement. There's a legal requirement for information to be provided to customs about exports once they're loaded on that mode of transport. So whether it be sea freight or air freight. So after the goods have been loaded on the vessel or the plane, as part of the outward clearance arrangements, the carrier has to provide customs with a list of goods loaded on board. So that manifest would typically include the name of the exporter or the consignor, so you as the exporter, but also the forwarding agent or the shipper, any marks or numbers on the packages, and the kind of quantity and all that kind of stuff. But it must that must be filed with customs before the goods depart, if you like. So that cargo manifest is really, really important. Bill of lading, you'll hear refer to an onboard bill of lading, a receipt for shipment bill of lading, straight bill of lading. There's lots of different terms that are used, but it is in essence it's a document created by the carrier or their agent, and it acknowledges receipt of the cargo for shipment. So as an exporter, it is one of the three most important documents that ensure that you get paid. The other two are the insurance policy that carry and also the commercial invoice. But the bill of lading is a really, really important document, and it confers document of title as well. So it's a really important legal document. With regard to airway bills, CMRs and CIMs, they're all similar depending on the mode of transport being used. But they don't transfer the title of goods. That's the difference. So an airway bill, they're typically carrier specific. So UPS, FedEx, DHL, and so on. And they're essentially acknowledging possession of a shipment. So it serves as kind of a receipt, if you like. You'll see that 11 digits at the top of the page that you can use to check the status of delivery or where it is currently. But they are all, those airway bills, CMRs and CIMs are just those kind of receipts of goods, if you like, depending on the mode of transport that you're using. And then insurance certificates, so or cargo insurance certificates, they're used to assure the consignee or the importer that there's sufficient insurance to cover the loss or damage to the cargo in transit. And again, it depends on the Incoterm as to who is responsible for arranging the insurance. So that's why those Incoterms are really important. So if your importer is arranging, or either way actually, if you're not arranging the insurance, you have to have a copy of the insurance before you ship the goods, if you like, or before you agree to receive the goods, because you don't want to be without insurance while those goods are in transport, especially if the Incoterm dictates that you're kind of responsible for them. Okay, and then quickly onto dangerous goods. So if you export goods or commodities that are classified as dangerous, then they have to have, well, first of all, they have to be packaged appropriately by someone who's qualified. So some companies aren't aware that if they ship dangerous goods, they have to have a dangerous goods safety advisor. So somebody who's qualified, sits written exams and keeps up to date with the latest regulation. They have to have that person within the company, but they have to have the goods that are shipped accompanied by a dangerous goods certificate, if you like. So it's all about protecting those individuals within the supply chain. So if anything happens, if any authorities like the fire brigade or so on have to get involved, they know how to deal with it. So as the exporter, you have to generate the right paperwork. So you have to provide a material safety data sheet or an MSDS, and you have to make that dangerous goods declaration. Okay, both documents should be provided to the freight forwarder because they need to know how to pack your goods, what they can pack your goods with, next to what, and the buyer, importantly, when he gets the shipment, needs to know how he can store it as well. Okay, I'm trying to think of anything else to say about that. I could tell you a really interesting story about pistachio nuts that one of my Institute of Export clients told me. I had no idea that they could be they could self-combust if they are shipped with their shells. So that's maybe a story for another time. But it's important that you understand your goods and how they need to be transported and stored, and that when they're dangerous or combustible or anything like that, that you're informing everybody throughout the supply chain of those hazards. And then finally, folks, payment documentation. So as you know, with trading internationally, there are several different ways of getting paid, and some of them might require documentation to be raised as part of that payment arrangement between, say, you, the exporter, and the importer. So we talk here about documentary collections and documentary credits, and they're payment methods used in international trade, quite often where there's no trading history between the two parties, or perhaps where you're dealing with developed economies, if you like, where the risks are slightly higher. So you would cover yourselves with documentary collections and credits. With a documentary collection, so you as the exporter would prepare the bill of exchange, and you'd state how much was to be paid and when. And then once your customer accepts the bill of exchange, they're legally liable for that payment. And only then do you, the exporter, usually through a bank in the overseas country, allow the customer to have the transport documents needed to take possession of the goods in that market. So there's a lot of paperwork that goes into documentary collection. Documentary credit, so this is where the customer arranges a letter of credit with their bank. So their bank agrees to pay you, the exporter, once all the right documentation, such as transport documents and so on, is in place and the goods have been dispatched. The bank agrees to pay if the customer defaults, if you like. So there's a lot around documentary credit as well, and those letters of credit. So that's another form of documentation that might be required in international trade. Oh, wow. So sources of information. Again, there's some 3 pages here. If there's anything that's not on there that I've covered today and you just want clearer, you just want more guidance on them, by all means, just drop me a quick email and I'm quite happy. I am motoring through. I had a lot of questions from last week, so I am trying to get through them as fast as I can, but I'm trying to fit them in around other client engagements. So if I haven't responded to you yet, I apologise, and a response will be on the way. But I think, Sam, I think that's it for me. Do you want me to have a quick look and see if we've got any?
Yeah, I think we've got some questions. I'm okay.
Okay, perfect. Right, so does the C88 form and process alter in the case of a duty representative? I'm not sure what you mean by a duty representative. If you're talking about excise duty, excise goods, alcohol, then no, it's the same declaration, but obviously there is another, if you're importing those goods, then there's another line of tax, if you like. So you'd have your import VAT, your normal duty, and then your excise duty. Is there any Brexit training for businesses working in services? My business educational training, Norma, up to you. Yeah. We've been very poor in the UK for training our service providers. I have to say, even the Institute of Export that I do training for, we haven't really covered that off. There are some core things that I think you need to be aware of if you're exporting those services like education and training. And if you want to drop me a quick email, I'm quite happy to guide you in the right direction. Obviously, it's around VAT, it's around recognition of professional qualifications. It's around making sure that if there's no UK-EU trade agreement, what does the local jurisdiction say about cross-border trading and services? So I can certainly steer you in the right direction, but I'm afraid I can't think of anything with regard to training. So I'm sorry about that. We import steel. There are numerous commodity codes depending on the type of steel in its form. Yeah. Do we have to do a separate C88 for each commodity code? No, Warren, not at all. On each declaration, you can have up to 99 items. So you can have up to 99, as you say there, products that are defined by their commodity code. So on the CH8, you have the header level data that applies to the whole declaration, but then there's item level data that can apply to each item. So if you were using a software suite to make your import declarations, it would guide you through this. You would say at the very beginning it's an import declaration, and you'd list that there were, say, 9 items, and as you'd done your initial header, then it would prompt you for the data on the rest of the 9 items. So no, definitely not a separate declaration, just items within that declaration. Can we just issue one combined document, commercial invoice and packing list, or do they need to be 2 separate documents? Very much 2 separate documents. So your commercial invoice is typically emailed to the customer in advance, and it's a document that does need to be shown at customs, but your packing list is something separate. You wouldn't typically have your commercial data on a packing list, and I'll tell you exactly why. So goods that we're exporting or importing can be subject to pilfering and theft. Goods do go missing, so you wouldn't want to be declaring the value of your goods on the packing list for anybody looking at a pallet, say for example, and can instantly say that it's containing £10,000 worth of goods. You wouldn't want to be advertising that. So definitely they're 2 separate documents. Regarding preferential origin files for jewellery, do you need to list each component of an item and its individual origin? You import your hooks from China and your links from India. You'd need to do, Alice, you'd need to do a kind of calculation, which I'm quite happy to steer you on that, on what that should be. Or actually, if you tune in next week, we're talking all about origin and how to determine the origin of your goods. But you're kind of on the right track in so much as you have to break down all of the raw materials and their origin, and then determine how much of the finished product those non-originating materials make up, and then how much processing you're doing in the UK to be able to say that they're of UK origin. But we're covering it next week, and if you know you don't get enough clarity, then I'm quite happy to have a dialogue with you after that. Can we have a copy of the slides? Absolutely. I think Sam sends those out. I'll get them across to Sam as soon as I can. I'm just checking, so that's everything in the, so let me check in the Q&A quickly. If we're continuing to export DDP to the EU, do we require a European VAT registered company in every EU country, or will one be? Right. I'll be honest with you, VAT is still an absolute headache, and I've engaged with a number of VAT specialists now, and they're struggling with it. We're still waiting for further clarification. If you are shipping those goods and you're responsible for the import duty and importantly the import VAT, then you are going to need a local VAT registration, not necessarily a registered company, but you need a VAT registration in those countries. And some of the member states are insisting that you have a fiscal representative there, which obviously has a cost attached to it. So it's really depending on the local jurisdiction as to what's needed there. But VAT is a real pain. I'm hoping that we can share more information with you over the coming weeks as it becomes a little bit clearer. If you were to hold stock in an EU country, then you could register for VAT in that country, and there's the potential that you could supply the rest of the EU using just that VAT registration, because you would use your EC sales list like we do in the UK currently. So that might be an option. If you wanted to hold stock locally in the EU, you could just register for VAT in that country where the stock is. Hello, we provide CRM software services to UK and EU customers, which being a few charities that are not VAT registered. How do we treat EU billing after Brexit? Currently all VAT registered. Yeah, this is a big one when we talk about invoicing consumers and those non-VAT registered businesses. The specific guidance around that, we're waiting for what's called the one-stop shop to come into play probably July next year. It's already been delayed 6 months, but that would enable you to supply, it would enable you to supply all of the EU member states for those B2C and those non-VAT registered businesses from one what's called an OS VAT return, a one-stop shop VAT return. And so long as your sales into those independent EU member states didn't exceed certain thresholds, then you wouldn't have to register for VAT in each one. So it's kind of an extension of the distance selling thresholds that are being withdrawn for us at the end of this year. But Inessa, if you want to drop me a line, I can give you some blurb on that. I'm probably not explaining it particularly well. Paul, we ship leaflets and promotional items to the EU. These are free giveaway items. Do we still need to list the commodity codes for all items? Yeah, you kind of do. You know, they're free of charge duty, so they do need to be listed on the commercial invoice. Sorry, my internet connection's gone unstable again. I don't know about the recording. I think that's probably one for Sam. And I'm so sorry, everyone. I've gone way over again.
That's all right, Andrea. Yes, I can answer that one. We are providing the recording. It will go out with the slides by the end of tomorrow. You'll all get an email with the link to access that.
That's super.
Right.
Well, thank you very much, everyone, again, for listening to me for an hour.
No, thank you, Andrea. Thank you, everybody, for attending. And Andrea, thank you very much for your time and guidance. It was great. Thank you.